This week on The Happy Dealmaker, Rob, Raybould, and I dive into the Q4 market report and look into how COVID is affecting business sales in our current marketplace. Let's drop into it. Rob, how's it going?
Hey, good. Happy Friday, Scott.
Yeah, happy Friday. So we were kind of discussing or talking about what we were going to potentially talk about on this episode, and the Q4 2020 market pulse report came out. I think it might be a week old or a week and a half old now, but it's still, obviously the information is still quite relevant. And I thought, why don't we just walk through that and kind of keep our conversation moving about it. But it also gives interesting data as things have changed in our new COVID marketplace, right? So the title,
absolutely, yeah.
So the title we're using here today is "How has COVID affected business value and sales?" And and the Q4 market update is out. So where you go?
Finally.
Maybe just to start off the top, like we were on the kind of before we started chatting, we were just talking about how that the CEBA loan that's coming through is starting to show up on balance sheets for people, and you were just alluding a little bit to what your valuation experts do with that. Maybe just we can start our conversation there, and then we can pull up the report after.
Yeah, for sure. So the CEBA, it's been starting to show up on financial statements, and it's good, actually. So that's the first thing to address is when you are doing the financials for your business, make sure that is a separate income line so that buyers know that that was used. It's very interesting because it's just a temporary income that is just to help at the moment. So we don't really consider it with the valuations going forward, because that loan will not be available, or at least so they say, will not be available in the future. So what are your thoughts on that? Have you seen it much?
Yeah. The last two businesses that we've been working with, it's on their balance sheet, right? It's shown up as a loan. And I mean, the challenge becomes, and this kind of maybe is a segue into the report, because it's similar in the States with their PPP program, but you have these extra loans that aren't going to come. You have this extra in the future, potentially. You have extra support that's coming through all the employee programs for subsidizing employee wages that may not be there in the future. So you're kind of looking at the financial statement and trying to do the best you can with it to project what it's going to be doing in the future. But I think the hang up is going to come, and it's to be seen, but the hang up's going to come that now we have this loan that is, the companies have been able to take $40,000 and they only have to pay $30,000 back. So now what does that look like when they're selling their company, and how is that going to affect the buyer moving forward? If the buyer's doing a share purchase, then okay, are we going to transfer that loan with the company? Depending on how much has been used of it, right? Like say a business owner has only used maybe $5,000 of that loan, then okay, well there's $35,000 in cash, and that's like can transfer with the company. So it's just another thing to navigate, basically. And I think there's two ways of looking at it. It's okay, we can sell this money with the company, and the buyer's getting this bonus 10 grand. Or like if a lot of that has been used up, that loan's been used up, well then the seller is going to have to obviously pay that off before the company sells it, and use the proceeds from the purchase to do so. But either way, it is something that needs to be figured out. Again, I think this might be the theme of our episodes, is that kind of figure this stuff out before you go to market, right?
Yeah. Oh yeah, this is just yet another negotiation that we have to tackle along the process, right? Absolutely. I'm a bit of a believer that it was the business that got the loan, so it should stay with the business. But I have definitely seen the negotiations where the seller uses it. But each business is unique, right?
Cool. Yeah, for sure. So I'm going to pull up this report, and we can just kind of scan through it, but it's got some interesting things in it. And for those, that have never seen this report before, there's an organization called the IBVA, which is down here, and they also operate the M&A source. And there's kind of like two different tiers of this organization, because one represents businesses that are on the, the main street market businesses doing under $500,000 a year in EBITDA, basically. That is like revenue cash that's taken home at the end of the day is under $500,000. And then the M&A source basically, represents as a body, looks after those businesses that are doing over that $500,000 a year in EBITDA, pushing, upwards to, $5, $10, $50 million in EBITDA, right? So the report kind of, as you kind of go through the report, it breaks it down essentially into those two segments, because they're quite different. And then I know for us, like kind of in our business, and I think for the most part for you, we're dealing with businesses that are kind of on that like lower side of the spectrum versus the $5 million in EBITDA and up.
Yeah. Yeah.
Yeah, for sure. So
no, I love that this report comes out. That kind of it shows people that I'm not crazy. Like the things that I'm talking about are actually justified by this. So I love it's a little validating.
I think the biggest question from sellers, and I mean, is what's my company worth, right? And these reports, they do a really good job of determining what that is, because again, like just so for people that are watching, the way that these things are put together is they just basically survey brokers over the course of the year for that quarter. They survey brokers what's going on, and then every broker that completes a deal, they put that data into these databases into this Market Pulse report, so that it aggregates it, and then you have a general idea of like what's happening in the marketplace, which is pretty amazing. So this page, really, like we talked about this a little bit because this is talking about how the loans are affecting transactions, and the main takeaway here was it's slowing things down because of uncertainty. I would say that was the main takeaway of this page. And then this gets into a little bit of taxes and this is for our US watchers, which is like, who knows who's gonna be watching the video, but it is interesting because the Biden, the Biden plan, whatever it might be, I don't know what exactly it's called, but their tax plan, it's changing capital gains potentially. And so if you sell a business that sells for more than $1 million, you're going to be paying double in capital gains potentially as of 2022. So
well, then how about on that note, let's reference at least locally here then. So yes, taxes are going to be applicable, and an asset share versus a share sale are going to impact you differently. So obviously you always want to check with your accountant for your specific scenario, but do you recall offhand what the capital gains exemption is? It's in and around 900,000.
I don't think it's 9 yet. It's maybe around 840, 860, something around
okay, there. That's what it is. Yeah.
It's pegged a little bit to inflation, so it goes up and down, but the big piece, and like what you're probably alluding to here, is that if you sell as a share sale, you can capitalize on that in Canada and avoid taxes up to that $860,000 mark, which is pretty great.
Yeah. So that's a question to ask your accountant is, does the capital gains exemption apply to me with my sale? Definitely ask that question.
Yeah. Because if you can't, anyway, that's the one that can be painful if you don't ask that question early, because it can cost you in the hundreds of thousands of dollars. And that's always a pain in the buns when you lose like $400K for no reason because you forgot to ask that question. So ask your accountant about the capital gains exemption, and make sure that your company, when you're Canadian, make sure your company is actually set up so that you can apply for it. So now we're getting to the actual market data, right? And this one was like super interesting to me. And because this chart, although it's like small here, and if someone's watching the YouTube video, you might want to like expand it up so you can see it. But this chart basically is the sentiments from brokers in the marketplace, whether they feel it is a buyer's market or a seller's market. And that's trended over time. And it's also looks here, like this chart up here, which actually you can't see my mouse, but I'm like highlighting the top part of the chart. That's this last quarter, all right? And like, what did you feel about this when you saw this?
I thought it was interesting that they thought it was like the seller's market, because again, like there were a few buyers that would reach out to me. They're like, "Hey, I'm looking for a bargain." Well, I guess that was more applicable to the quarter 2 and 3, and as you can see, it's actually trending up from there. So I believe that. That's a tough one. It's definitely trended up from quarter 2, which I would say is correct. How about you?
Well, the thing that I took away from this, which was like the big aha for me in this chart, was that if your company is doing under that $500,000 a year in earnings, then there never has been a seller's market for you. Like going all the way back to 2013. Like if you look at the bottom chart, right? And if your company is doing, over $5 million, then you've just like comfortably always been in the seller's market. And so, what that says to me, and because this data goes all the way back to 2013, at least what's displayed, I think it goes back further than that, is that, okay, the more earnings you can get in your company, the more you grow your company, the less companies are out there that you're competing with. So all of a sudden, like now you're continually and perpetually in this seller's market, right? Whereas,
True.
if
Yeah.
you're dealing with if you have a smaller business, which kind of represents, 85-90% of the marketplace, there's just a lot of other people out there that you're competing against. So you are, perpetually in a buyer's market. So it's,
That's a good look. Yeah, I think that explains it very well.
yeah. So that's kind of what I got out of this one, which was interesting and, probably reflects reality. And then the next part of our chart here, for the kind of go forward to the next page, this is more what people I think are trying to ask about, right? It's like, okay, so who's buying these companies, right? And I found, like, was this one a shocker to you at all, or is this kind of, par for the course?
No. It's definitely first-time individuals, especially under the 2 million. There, I would agree with that 100%.
Yeah, for sure. And it's
Yeah.
like, so this page is basically saying, okay, if you have a business that is, and the Happy Dealmaker channel is all about, educating business owners that are doing under that $5 million in revenue. So if you're, then that's represented this top of this chart here where it says there's, 73%. But, everyone's always optimistic about selling to, competitors, or they want to sell to a bigger company, or, they want to sell to somebody who is, a serial investor that's always buying businesses. But the vast majority of people that are purchasing companies of that size, like what this chart says and what's actually happening in the marketplace, is first-time buyers that are, individuals.
And again, that goes for the size of the business. So the upper, like, you can kind of look at upper and lower charts at the same time. Definitely the business is a little less in value there. Yes, it's going to be the first time entrepreneurs looking to jumpstart their career. And then if you look at the bottom one, then you can kind of see that the seasoned businesses are now acquiring a little bit more. So the seasoned businesses are looking for those bolt-ons for their current businesses to further their value. So I definitely see this in the marketplace.
Yeah, and it seems to it's interesting that they're breaking this up here. Buyers were individuals, and the purchase price of under $2 million, right? So that's kind of seems to be, a tipping point, I suppose, between when you can really crack over until, let's call it like institutional investment, where, strategic buyers and like private equity companies are coming in and they're looking and they're interested in these companies that are worth more than $2 million. So that's kind of an interesting stat. I thought that came out of the report there. And then this is our whole show, right? It's like, okay, what's episode? It's like, what is actually happening in the marketplace this last quarter, right? And I mean, this last quarter has been heavily affected by in the COVID environment. So it really is an indication of what's going on here as far as business valuation. And that's what things are actually selling for, which is, what I think is more important. It's like, okay, not what we're dreaming of selling for, what things are actually selling for. And that's what this page is telling us about. So anything that jumped off on this one for you?
I have to admit, I jumped right to the multiples. I kind of skipped a little bit over the business valuing trending. Yeah, like that's percent of, because that's representing asking price versus closing price, and that can change. That's very dependent on the business and who buys it. So I don't know. There's way too many variables in that graph, if you ask me. But I jumped right to the multiples, and I love this because this is the basic question is, how much is my business worth? And there you go. Historically, that's the numbers. And what I like to point out is how steady the numbers are.
Yeah.
Like under 500, it's like 2, 1.8, 2. And actually look historically, 2, 2.3, 2. It's very, very stable, and even amidst a complete lockdown in the country, it only dropped down 0.2. So very, very sturdy. And as you see, under 500 kind of dips, the rest of them actually bumped up. So again, like the higher value businesses are kind of proving how resilient they are and how needed they are by the communities. So that's what I saw. What did you see?
Yeah, I mean, that's exactly what I saw here, which was incredibly interesting to me because as you sit with this report, but kind of before you crack it open, you have your preconceived notions of what's going to be on the inside of it, right? And you're thinking, all right, well, because of, what's happening in the marketplace, business valuations are, going to drop for sure. And likely the multiples that they're selling for are going to drop as well. But they haven't. They just seem to, especially in that that lower market, in that Main Street market down here in this like 500 below 500K, that is kind of like where our sweet spot where we operate. It just seems to consistently be that 2 times seller's discretionary earnings, which for the listeners are, that's just essentially the earnings that you take home at the end of the day, plus your salary on top of it. So really,
but that's huge. That's huge to point that out. So the first
yeah.
three rows there are seller's discretionary earnings, which is EBITDA plus owner's wage,
Yeah.
and then the bottom two are just EBITDA. Again, that's when you break into that higher, I guess, revenue stream or value, you now have management in place, and you're not an owner operator typically. So that's something to take away. There is the multiple is being applied to a slightly different number, a slightly different kind of form of cash flow. Now, with that said, when you apply these multiples, it is to a seller's discretionary earning or an EBITDA, but of a 3 to 5 year average.
Yes.
So again, like how businesses decide to take their business off the marketplace because they wanted to wait for the pandemic to disappear and life to return to the normal. And unfortunately, though, we're still taking 2020 into consideration 3 to 5 years down the road. So yes, you can wait for the pandemic to end, but those financials will still be counted. The year did still happen. We can't just void an entire year out of a business, right? So something to keep in mind, if you're waiting for the pandemic to end before you're listing, we're still going to have to consider 2020 financials. It's just really the rule of business valuation.
Yeah, I mean, it's still going to be included for sure. I think that it's hard for sellers, and it's also difficult for buyers to think about, okay, when do they want to acquire, and when do they want to sell, trying to navigate through these waters. But I guess like my takeaway and my advice right there for that would be just do the exact same thing you would normally do anyhow, which is like run your business with the focus of making it as sellable as possible and putting as much value in it as you can. And then you should be doing that anyway, right? So it's like don't change what you would be doing if you're thinking about selling, because what this report is showing us is like, okay, values are kind of still staying steady for those quality companies that are actually selling. Because I think it might also be warranted to say here that this report is only based off of businesses that sold. So it doesn't factor in at all businesses that tried to sell and didn't sell. So these are like only companies that sold. So just do what you're going to do anyhow. Keep building value in your company. Do the best you possibly can for the 2020-2021 year. And it's going to put you in the best position to sell later, or it's going to put you in the best position to sell now. It doesn't matter. So
love it. Yeah, that's the golden rule. Just make sure you're valuable, right? But like you're building up the value of your business, and that's even when you're listed, right? Like don't be taking the foot off the gas pedal. You need to be continually building the business even when you're listed.
For sure. This quote from David Ryan that's in the report here I found pretty interesting, because it says businesses impacted by COVID are still selling in this market. This is from a financial group. It said one structure we're seeing is that buyers are basing multiples on current performance and then structuring an earnout based on seller's 2019 value, which is interesting, right? So it's like basically buyers are saying, okay, I'm going to pay you for what your company's worth today in this current environment, because we really don't know, we haven't seen the end of this, so we don't know how it's going to turn out in the future. But we're going to base our earnout on the 2019 numbers. So assuming that when things go back to normal, the business is going to revert back to what it was making in the years pre-COVID, then that's what they're basing the earnouts off of. And for listeners, like earnouts are basically that chunk of payment you're going to get if you hit a specific target in the future after your business sells. So that was an interesting quote in there as well.
How many earnouts do you typically see?
Like in our size of transactions that we do, we don't see a ton of them, right? So when the businesses get a little bit bigger, so they're selling for that above $1 million a year or above $1 million, you start seeing them. I find that that's when they track in. But that's a good segue because it brings us to this next chart, which I don't know if you like led me right into that.
I did, yeah. So that was a very fun quote that they placed there, because it's the very next chart here. You can see that very little earnouts actually happen, especially in the sub 500,000. But even then, when you get up to 5 to 50 million, it's only 5% up from 2%. So really, not a whole lot of earnout activity out there.
Yeah, which I actually found that interesting, I think for people that are watching this, that are thinking about selling their company, what is the thing that I would pull out of this is that if you look across the board, it doesn't matter what the size of the company is, that cash at close is landing around that 85% mark. And this is across the board, right? And I know in my experience from sellers, when you meet with sellers and you kind of sit down and I always ask the questions like, are you willing to take, a vendor take back in this deal? That is finance a portion of it for the buyer. The answer to that question is invariably always 100% of the time no.
Like, oh yeah, exactly.
Yeah.
Oh yeah. Well, yeah, exactly. I would say 95%, and then the other 5% would be what's the vendor take back, and then you explain it, and then it becomes a no.
Yeah, exactly.
So yes, exactly.
Yeah, but this shows. Sorry, Rob. This shows that
go ahead.
It's like at the end of the deal, when the transaction is actually complete, this is reporting on companies that did sell. 85% of the cash at close. That's what people are getting, right? And then the rest of it is using seller financing, using an earnout, or some retained equity.
Mm-hmm. Well, I think later on in the report we kind of look at why they start selling, and yeah, definitely sellers for the most part just want a clean, easy exit, and yeah, they don't want to be anchored. However, when you do the vendor take back, it really, really, really helps out the buyer, sets them up for success, because more financing becomes available when lenders see that the owner is willing to either do a vendor take back, an earnout, or even like the last column, their retained equity. Then people are far more willing to lend to the businesses. So it's a little unfortunate that we don't see more of it, but I can definitely understand the seller's point of view, right?
Oh yeah. I mean, the nice thing about being in our shoes is you can understand both sides, right? Especially having sold companies of our own and that kind of thing. So you get it, but this just is the data, and you can't, like, I love the fact you can't really argue with the data, right? It is what it is. Most of these deals, you're not getting all cash at close. And I will also say that part of the reason why it isn't all cash at close is by giving a vendor take, but it allows you to push up your purchase price, right? So you can kind of stretch out a little bit from what the buyer has, like the cash they have available today, that stretches it up, it kind of moves it up a little bit, so you can actually sell your company for more if you have that seller financing in place.
It's a little riskier, but yeah, it could definitely help out your retirement. Like if you wanted to have a little bit more income coming in monthly, it can work in your favor, but it's all about how much risk you want to take on at that point in time, right?
Yeah, for sure. And then the other thing that people usually ask is like, how long does it take to sell my business, right? And this page talks to that as well, which is, how did you feel? Are you finding this consistent in the marketplace for the businesses that you're selling, that these numbers are, fairly accurate?
When I answer that question, everybody is surprised. This is not at all like selling a home, especially in the market today in BC. It's definitely a bit of a commitment when you do this. So when you're looking to sell, be prepared. There's a bit of a journey ahead of us. Actually, I was a little bit surprised on this one. I expected the difference between 2019 to 2020 would be vastly different, because when we do our due diligence period, it's not so much finding the buyers as it is just the due diligence that takes longer. When the lawyers go out to reach out to CRA and all those other background checks to see if there's any liens or anything in place, it just takes that much longer for them to get back to you with the yay or nay, right? So it's not the buyer, it's just waiting for people that aren't in the office anymore. They're working from home, I guess less staff. That's where I find the timeline was stretched. How about you?
Yeah, for sure. Like, it is interesting that it didn't change. And to be honest with you, when I looked at this, I'm like, it seems, and this is the last thing any seller wants to hear is, like, it seems kind of low. Like, this seems kind of quick, And I mean, you can make these numbers lower if you wanted to. You're like, oh, I really want to sell my business tomorrow, fine, and then you can just move the price and just drop your price and it'll sell quicker, right? But I think if you really want to maximize value in your company's sale, this says 7 months to close in this report, but I would add a couple more months of that, so that from the time to get prepared and get things ready, to really truly maximize your value. And then
you hit a huge point there.
Yeah.
Well, I was just going to talk to your one point there of price, is that if anything is going to change the purchase time frame, price is definitely been the most effective. I've seen a gas station actually complete within 4 weeks, and then I've seen marinas take 2 years. Yeah. So it's I guess it does average out to this, but it could go either way.
For sure. And then I think the number is what I always say to people is, like, it really is that, the time before you get to that letter of intent, which is broken down in this report, when someone makes that initial offer that gets signed, that time should be pretty standard. It's like, how much time does it take you to get through due diligence once you've got an accepted offer? And that's showing us on businesses that are, the main street, smaller businesses, that's taking about 2 months. And for larger businesses, taking up to 4 months. And I mean, I would even say that 4 number is like pretty low for these really high, like really larger businesses, because diligence can last a bit longer than that. And I'm surprised that number is that low, especially during this period of time where there's so much uncertainty.
Yeah, absolutely. But so that was a little bit of a shocker that it's so low and so consistent.
Yeah, I mean, I guess the big takeaway is the consistency across the board. So did this one hit you? This exit planning chart?
Not at all.
No, it didn't? Oh, it actually surprised me a tiny bit. Yeah. So
actually, that it's so high, so low of retirement planning. Yeah, very few plan for retirement. What do you see?
Well, I don't know. I mean, this exit planning space, you run the exit plan summit. It's like you're kind of constantly beating the drum. It's like, hey, let's plan to exit. But maybe I need to change my tune a little bit of planning to exit, where it's just like, hey, let's plan to make a quality company. Let's make an asset that's sellable. And then that might be the message to spread, because it doesn't, like, I actually don't really think it matters if you're planning to exit. You really just need to be planning to make a good company. And then it's ready, and it can be ready to rock and roll. But this chart here, what it says is for businesses that are, in that, again, our sweet spot, 80% of them are not even thinking about it. Like, not even a thought, like not even planning, zero. Like, well, maybe people that watch this video is like, okay, maybe just even a little bit, like just a little bit.
Yeah. Just a thought would be nice.
Yeah, a little bit goes a long way for sure. And I guess what people maybe don't understand is that exit planning, every little bit you do for that, it really just is value enhancement of your company. Maybe we should just start calling it value enhancement, because that's essentially what it is at the end of the day. So that was this one. And then this was just interesting, I think, just like what are people buying, as far as, industry and sector segmentation. And I found this one, interesting, because it was just pretty much even across the board.
I would like to actually talk to the last page just a little bit more. So I have a saying, don't wait till you're tired to retire. Far too many times, and it's really, really, really sad. Like, I love business and I love to see everybody else's success. But when the senior members come and reach out to me and they're interested about selling the business, they've let their foot off the gas pedal for too many years, and they know very well, and they've proven that it could be a very successful business, and there's lots of sales to be had. But because they haven't been keeping up with that performance over the last 3 to 5 years, which is where we make the average, or where we look to predict the future of the business, it's too far gone. So again, don't wait till you're tired to retire, and also start the conversation with your kids early, because far too often the kids see how hard you've been working in your business, and as great as it has treated you, they just don't want to have that same lifestyle. So again, very common to see folks looking to retire and their kids actually decided not to take on the family business for that reason. So start having conversations as like today, yesterday, as soon as you possibly can. Just start talking to everybody. Hey, are you interested? Yes, no. If not, okay, I need to start considering something else. So I just wanted to throw that in there before we head to the next page there.
Yeah, I think that's really good advice. And that advice, what you just said, that can happen with a beer. It can happen with a glass of wine. It can
Yeah,
happen over, like, it doesn't matter. Like, you don't really, it can be done in a relaxed environment. Like, just
yeah.
what are we doing with this company, and just get the ball started rolling, right? Okay, so this is like I said, this is interesting. It seems like all sectors are pretty much selling almost equally in the main street,
Yeah.
for sure. And then, as you move up the market and up the value chain a little bit, it segments out a little bit more. But I think it's pretty consistent across the board. And I know this is like hard to see, but it's just talking about kind of restaurants versus like service businesses and healthcare businesses and construction companies. But yeah, it's pretty even.
Yeah, okay, so my takeaway on this one, yes, how consistent it is across the industries, and two, look how strong restaurants still are. Like, they were
Yeah.
said to be one of the hardest hit industries from the pandemic recession, and look at them, they're still trading hands. So that is fantastic to see.
That it
At
is.
least a sub 2 million.
Yeah, for sure. And we sold a restaurant during this pandemic, and we've got a letter of intent last week on another restaurant during the pandemic. So it is, I mean, that's what we've been seeing in the market for sure. It's obviously, the deals are a little bit slower. People are more cautious about them because, there's a little bit of uncertainty. Due diligence goes a little bit longer, but it's still happening. I think everyone knows that, in our heart, we know we want to go back out to restaurants and dine out. Like, it's a
Yes.
big part of our culture, and I know that industry is going to rebound, and I think buyers know that too, right?
I can't wait for that day again. But I wish they could have broken it down a little bit more, because I bet you a lot of that would have been quick serve restaurants, a little bit more of the fast food and franchise. At least what I was seeing, it was definitely a lot more on that front than,
Yeah,
say, pubs.
yeah,
Yeah,
for sure. Yeah. And I think that's the end. Yeah, that's the end of the report. And this is a shot of Pepperdine University, like just a
nice.
little bit south of Malibu. It's like partnered in putting this report together. But I think I'd like to just thank. I'll scoot back to the beginning. So to the IBBA for putting this together, and everybody that kind of puts the data
Yeah,
into it for it to make it happen. Because it's a lot of work for them to put this report together every single quarter, and it's really helpful for people that are thinking about selling their companies and the actors and players that are within this industry.
yeah, no, it's huge. But again, take away that this is only sold businesses. I've been trying to find a stat, or at least a reliable stat. I've seen it outdated, but only like 80% of, 20% of businesses that list for sale actually sell. I'm trying to find the source of this. I keep hearing it around the industry. Like, I've looked on our local MLS, but again, with our industry, there's a lot of silos of data. They're not all joined up in one location, but definitely looking through our local MLS, which some businesses transact through, only 13.4% actually sold in 2020. I think a lot of that has to do with, like you said, like the business has to be sellable. There has to be value there to the next person, as well as expectations on selling price have to be there. And I'm very thankful that this comes out. It kind of helps us I guess paint a more thorough picture to the business owners that want to sell, that hey, this is what the industry is. This isn't us just pulling random numbers out. This is North America wide, right?
Yeah, for sure. And I mean, to get to your point of like kind of finding that data where it's like how many businesses that try actually succeed in that sale process, that was a big question that I had leading into that summit that we did. And Nunzio Presla, he owns a buy and sell a business.com, and it's kind of one of the bigger sites in Canada for business sales. And he said that 40% of their listings sell. And I thought that was that was a really nice high number. And I asked him, like, what is that attributed to? And I think he thinks it's part and parcel that one of the major things they do with their site is education. So it gets people in that right price bandwidth that you talked about. Because if you're not in the right price bandwidth, and I mean, a lot of sites you can go to, and like for us that are in the space day in and day out, you can just scroll through those and go, there's no chance, right? Sadly. But when you get to something like, okay, this one makes sense, like going back to that SDE number of two year over year, right? So you can see something that's like in that price point, like, okay, this has a chance, right? It'll actually potentially be sold. So I think they do a good job of that with their site. And I did ask that question to Bob House as well at Biz Buy Sell, which is kind of the largest site in North America for companies. And he didn't have like a clear, direct answer to that, because he's like, we don't really know, because people will post their business up and then they'll take their business down. And it doesn't mean, like, they might have sold it and that's why they took it down, or they might have, just decided like, we're going to go and try and sell it later, or it might have failed to sell and, just shut its doors. So they don't really know that. He's like, the only reason why they know some of that information is because the brokers that are part of their network report back, the sale numbers and success or failure kind of thing. But again, I said, those numbers aren't 100% accurate, because brokers are really selective about what businesses they take on. And so you're already like kind of narrowing the field to what's sellable in the first place, because the broker's done that pre-screening process up front. So that data is not even 100% accurate, right?
No, right? Yeah, it's tough to come across data, but I'm liking that more and more of it is becoming available. So it's just a matter of time before, actually, just the more that we use it, the more people contribute, the more that it comes available. It's just a nice flywheel that should be becoming more and more reliable as the years come.
Yeah, I agree. Rob, thanks for dropping in.
Of course, I love it. This is great.
That was a good episode, yeah. And so, I mean, for those that, I would send people directly to this report, but it is kind of a report that is, you're supposed to be part of the IBBA to have access to it. And so make sure that if you're getting a broker, you're working with somebody, that they're part of that organization, because it gives them a little bit of a leg up.
Yeah, for sure.
They'll be able to share it with you. So anyway, we'll catch you, next week, or, the week after, whatever, till our next episode.
Exactly. All right. Take care, man.
Okay, talk to you.